Feeling the sting of punishing tariffs? What happens when Canada's largest trading partner suddenly imposes steep tariffs on its steel and aluminum exports? As the United States raised trade barriers, an unexpected global coalition emerged, ready and eager to fill the void. Who are the 10 surprising markets that stepped up to support Canadian exporters during this time of economic strain? From the glittering docks of Rotterdam to energy-thirsty hubs across Asia, these nations didn't just purchase goods, they helped rescue Canadian industries teetering on the brink. Stay with us as we unveil the 10 countries that transformed a crisis into opportunity, keeping Canada's economy afloat and protecting jobs across the nation. Number 10. United Kingdom. Ever wondered which market came to Canada's aid when the US shut the door on Canadian metals? In March 2025, just as American tariffs struck a blow to Canadian steel and aluminum exports, an unexpected hero emerged. Exports of unwrought gold to the United Kingdom surged dramatically, making Britain the largest contributor to an astonishing 24.8% increase in Canadian exports outside the US that month. And this wasn't a short-lived spike. Since December, shipments of precious metals have steadily climbed, indicating a persistent demand from London's vaults. What triggered this surge? Analysts credit global economic uncertainty and a renewed push by Britain's tech and aerospace sectors to diversify portfolios. Could this golden connection reshape Canada's export strategy in a post-tariff era? If the UK's appetite is any indication, more markets might soon follow its lead, transforming economic adversity into fresh opportunity and keeping Canadian factories running. Number 9. Netherlands. Think you know who followed? Picture massive oil tankers setting off at dawn. When the tariffs hit in March 2025, the Netherlands didn't hesitate. Dutch ports quickly became a critical gateway for Canadian crude oil exports. Shipments to the Netherlands rose sharply, contributing to a remarkable 32.0% surge in Canadian exports to the entire European Union that month. Refineries in Rotterdam eagerly absorbed Canadian crude, helping offset the loss of US buyers almost overnight. According to trade officials, Canadian crude oil exports to the Netherlands doubled year over year, reflecting the EU's increasing demand for stable, non-disruptive energy supplies. What's fueling this expansion? Europe's commitment to diversifying its energy sources, and growing investments in green hydrogen, signal the potential for long-term partnerships. Could the Netherlands become Canada's new strategic energy hub? That's the bet Canadian exporters are making. If you're intrigued by these developments, be sure to subscribe for more deep dive insights. Your support helps us continue spotlighting the global shifts that matter. Number 8. Hong Kong. Which global financial center quietly stepped in to buy Canadian energy while others hesitated? Picture towering tankers arriving in Victoria Harbour, not carrying tourists, but loaded with Canadian crude. In March 2025, oil exports to Hong Kong skyrocketed by 35.2%, sending shockwaves through the global energy market. From just $630 million the year prior, shipments jumped to around $850 million, fueling a 31.9% increase in Canada's non-US exports that month. As the US tariffs took effect, Hong Kong's investors, known for their sharp risk assessment, poured capital into long-term Canadian energy contracts, betting on the country's stability and resources. Could this shift reshape Asia's energy trade landscape? With China's own tariffs complicating trade and Hong Kong maintaining a more open stance, this city-state became a crucial link in Canada's export chain. And the effects reached beyond oil barrels. Equity markets rallied, shares of Canadian oil giants rose, and investment flowed into Western Canada-focused exchange-traded funds. Analysts believe this isn't just energy strategy, it's a broader geopolitical pivot. As Europe reduces its reliance on Russian gas and the US revises its alliances, Hong Kong's consistent demand could set the stage for a trans-Pacific energy partnership. While skeptics predicted demand might fade as prices eased, April data showed continued orders, suggesting multi-year commitments. And with LNG projects in Canada poised to expand later this year, this could be just the beginning of deeper cooperation. Number 7. Germany. Think you know which industrial heavyweight came next? Imagine high-tech automotive assembly lines in Bavaria, now powered by Canadian steel. In March 2025, German demand for Canadian-manufactured goods surged, with exports jumping 28.7% year-over-year, reaching approximately $3.1 billion USD. This contributed to a broader 32.0% increase in EU-bound Canadian exports. Why? As U.S. tariffs tightened supplies of steel and iron, German automakers and industrial firms scrambled to secure alternative sources. Canada stepped in, supplying billets, rods, and precision components. But the boost wasn't limited to metals. Industrial machinery, aerospace components, and agri-food equipment shipments also climbed, reflecting Germany's commitment to diversifying its supply chains post-COVID. One of the most striking developments, Canadian exports of clean-tech modules and specialty alloys, essential to wind turbines and battery production, have more than doubled since December. According to insiders, these aren't temporary measures. In fact, multi-year agreements signed in Frankfurt now outnumber short-term contracts by 2 to 1. Could this be a lasting pivot toward Canadian suppliers? Many believe so, especially as Germany prioritizes energy security amid shifting European geopolitics. Worried about logistics? Don't be. Expedited rail and sea routes have reduced transit times by 15%, making the Vancouver-Hamburg corridor nearly as efficient as Atlantic crossings. New bilateral customs agreements are also streamlining clearance. If this fascinates you, hit that subscribe button. Your engagement helps us uncover the global trade stories shaping tomorrow. Number 6. France ever considered how a glass of Bordeaux might pair with Canadian canola oil? Since the Comprehensive Economic and Trade Agreement, CETA, took effect, Canada's trade ties with the EU have flourished, nowhere more so than in France. Bilateral trade with France has soared by 65% since 2017. In fact, by last year, France had become Canada's fourth largest export destination, importing over $3.21 billion USD in Canadian goods. But the first quarter of 2025 was even more striking. As U.S. tariffs disrupted North American supply chains, France increased its purchases of Canadian pulses, specialty crops, and forestry products. Field crop exports are projected to rise 5% in the 2024-2025 growing season, driven by demand from French millers and bakers looking to diversify grain sources. At spring food fairs across France, Canadian malting barley and maple syrup stole the spotlight, unexpectedly becoming crowd favorites in Provence's gourmet circles. One exporter even remarked, "Who would have thought maple syrup could steal the show at a Paris expo?" That's not all. Canadian heavy machinery and aerospace-grade components have become hot commodities in Toulouse and Lyon, filling gaps left by U.S. suppliers. Japan. Have you ever thought the gas heating your home might originate from beneath the Canadian Rockies? As U.S. tariffs disrupted North American trade, Japan quietly turned to Canadian LNG, liquefied natural gas. In early 2025, Japanese utility companies rushed to sign long-term contracts with the LNG Canada project, which is expected to ship its first cargo by mid-year. Even Alberta's environment minister flew to Tokyo to promote Canada's geopolitical stability and shorter shipping routes, favoring it over suppliers from the Gulf Coast. Yet, ironically, Japan's domestic LNG demand had actually declined by 0.4% in 2024, reaching 66 million tons, due to renewable energy adoption and nuclear restarts. Despite this, major utilities like JERA and Tokyo Gas signed 13 to 15-year agreements, a strategic hedge against potential surges in demand if renewables falter. What caused this urgency? Growing uncertainty over Sakhalin-2 contracts and a clear desire to reduce reliance on Russian gas made Canada an attractive alternative. From Osaka to Sapporo, energy executives now see Canada as a game-changer. This isn't just about keeping the lights on. The LNG boom has already boosted Canadian energy stocks, a signal that investors are confident in this Asia-Pacific realignment. As U.S. supply reliability wanes, Canadian LNG may soon be heating homes from Hokkaido to Kyushu. High-grade veneer, flowed into Surabaya and Medan, with values rising 28% to $120 million USD. The biggest surprise? Exports of Canadian agricultural and industrial machinery soared by 35%, hitting a record $85 million USD. Think tractors plowing West Java's rice fields and precision drilling rigs operating in Sulawesi, all stamped, made in Canada. These aren't short-term gains. Multi-year supply deals guarantee consistent flow through 2027, securing Canada a top 3 position in Indonesia's machinery market. Energy, too, saw a transformation. Indonesia's state-owned PLN approved a pilot project for Canadian biofuels, buying 150,000 tons for testing in Bali, with an option to scale to 1 million tons by year's end. Meanwhile, Indonesian snack brands are blending maple syrup and palm sugar, creating gourmet fusion treats that are now being exported back to North America. What's behind this pivot? Food insecurity caused by failed 2024 harvests and a desire to diversify away from volatile U.S. politics drove the shift. Canada delivered on reliability, and Indonesia responded with open arms and open cargo holds. So, next time you enjoy spicy sambal lentils or a maple palm cookie, remember, these aren't just tasty treats, they're trade lifelines reshaping global commerce. Ecuador. Picture the Andean highlands and Amazon valleys emerging as champions for Canadian agriculture and forestry. In Q1 2025, following a mid-2024 free trade pact, Canadian exports to Ecuador surged. Agri-food shipments jumped by 38%, reaching $95 million USD. Ecuadorian breweries and distilleries led the charge, snapping up Canadian malting barley, with export volumes soaring by 55% year-over-year. Small batch craft brewers from Cuenca to Guayaquil couldn't get enough. Meanwhile, forestry exports, engineered timber and pulp, rose 22%, totaling $45 million USD, driven by booming urban construction. In March 2025, Canadian ag tech firms signed landmark agreements with Ecuador's Ministry of Agriculture. These deals included 2,500 precision sensor units, worth $12 million USD, with promises to double crop yields by 2027. The shipments left Vancouver docks just days after signing. Another innovation: Ecuadorian cacao farmers began trialing Canadian bred, disease-resistant cocoa hybrids. Early tests showed 20% higher yields, without compromising flavor, an exciting development for gourmet chocolate markets in North America and Europe. Why this transformation? Ecuador, long dependent on oil revenues, is now seeking to diversify its economy and secure food supplies. Canadian precision technology and materials met those needs head-on, turning a basic trade relationship into a strategic partnership. Australia. Imagine the sunburnt deserts of Australia swapping dependence on beef and fossil fuels for Canadian clean tech and agri-machinery. In early 2025, as energy shocks and raw material shortages hit home, Australia turned to Canada for solutions. In February 2025, Canadian exports to Australia hit CAD $179 million, a 3.8% year-over-year increase, despite ongoing U.S. tariff instability. Even more impressive, industrial machinery exports, everything from solar panel assembly lines to harvesting equipment, hit a record $531 million USD in 2024, laying the foundation for a robust 2025. A March Canadian trade mission locked in multi-year deals for clean tech modules and farm machinery, with insiders projecting a 30% surge in shipments. Why the urgency? Australian leaders, grappling with unreliable supply chains, sought partners offering quality, consistency, and affordability, all boxes Canada ticked. Agricultural exports, especially pulses and specialty grains, also found new traction, increasing by 22% in Q1 2025 as drought recovery efforts took hold. Add in an 18% increase in engineered lumber exports, and it's clear a full-blown trade revival is underway. From Melbourne's eco-zones to Perth's mining corridors, Canadian exports are reshaping Australia's import patterns. With contracts locked in through 2027, this isn't just a spike, it's a permanent pivot. When U.S. access faltered, Canberra opened its doors, and Canada stepped in. Singapore: can a city-state of just 5 million people outpace entire continents in supporting Canadian trade? In March 2025, Singapore imported SGD $291 million, roughly USD $215 million, worth of Canadian goods, an astonishing 163% increase from February 2024. Aerospace and aviation parts, vital to Singapore's Changi-based MRO, maintenance, repair, and overhaul hubs, saw a 28% jump in Canadian exports, driven by demand for high-precision alloys. Canada's clean energy sector also surged, with LNG byproducts and biofuel precursors gaining traction among Singapore's petrochemical giants, pushing energy trade up 35% year-over-year. On the digital front, Canadian fintech platforms and compliance software saw a 42% growth, as Singapore continued its quest to become Asia's fintech epicenter. Multi-year contracts signed in March now ensure Canadian-built cloud computing and AML monitoring systems will be in place through 2026. What's fueling this boom? Singapore's supply chain diversification strategy, driven by rising regional tensions, has made Canadian products, from refined petroleum to digital services, key to the city's future. It's not just filling supply gaps, it's building a strategic alliance poised to reshape Asia-Pacific trade. From Indonesia's ports to Ecuador's farms, from Australian rooftops to Singapore's tech corridors, these partnerships didn't just support Canadian exports. They helped rescue industries when U.S. tariffs choked traditional routes. If this deep dive into global trade realignment sparked your interest, like, subscribe, and share. Your support helps us uncover the next wave of export transformations reshaping the world economy.